All right, what is up, traders? What's up, tycoons? For today's video, we are going to be covering some gold stocks. All right, gold, I think, is preparing to have a really nice move up into the 260s when we're speaking about the gold ETF, GLD. We'll break that down in today's video, take a look at the smaller time frames such as the daily, and then we'll go over this ratio chart that I explained in one of my last gold videos, one of my previous ones, what that means for gold relative to the market. And everyone is always excited and talking about the miners. So we'll look at GDX. But to me, junior gold miners potentially could be a better play. All right. And I've highlighted that before. We'll talk about why that is. All right. We'll take a look at the GDX weekly time frame as well as the daily, what we have here occurring, some really nice patterns and formations setting up. And then we'll take a look at one of the top performing junior gold miner stocks. Okay, this stock has had an absolutely terrific run. All right, if you look back here, this stock was just under $2 and it's trading at over $9 right now. So very impressive gains, very impressive moves. When you talk about momentum and strength and leadership in the gold related stocks, Harmony Gold Mining is definitely one of them. And on a daily time frame, we've got another pattern here setting up potentially for a new trade opportunity. So we'll break that all down in today's video. It's going to be a good one. Be sure to smash the like button, subscribe to the channel if you're new. And as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new, I actually started a completely free newsletter for you guys. It's called Investment Intelligence, and I give out free valuable finance and trading related content every Wednesday, and Sunday is going to be the new schedule for these, okay? And then I'll sprinkle some in between whatever I can, right? There's a website associated with it, and there's many trade ideas inside of this newsletter as well, okay? Highlighting patterns, key levels, different things like that. And so if you like the videos and you want to know what stocks I'm looking at or what sectors or things like that I'm paying attention to, the newsletter is a great free way to do that, or you can just simply keep up with the website and check it on Wednesdays and Sundays. Now, there is the Investment Intelligence Discord where you get full access to all my analysis, all my different trade ideas, what sectors, what rotations, ETFs I'm paying attention to, as well as individual stocks and in certain areas of the market. And plus, there's many more features. Now, it's only $1 for the first month to get in right now using promo code May24. That will get you access to the Discord for just $1. We're really, kind of revamping it and changing a little bit of the structure in it and trying to bring some new things into the Discord. And there's going to be some really cool new features that, Discord members will have starting in June. So excited for that. And while we revamp, you can get in for just $1. Okay. Now let's go over GLD here. What do we see on the weekly time frame? Well, we see that the RSI broke out here. Okay. The RSI broke out right over here. And these RSI breakouts, offer some really good opportunities, okay, by jumping the gun. So if you see here, the stock hadn't really broken out, right? We actually formed a cup and handle right here at this moment, but the RSI was already breaking out. Now, the RSI is what's known as a leading indicator, and, it tells you what's potentially going to happen in the future with the stock, okay? And so we see here that the RSI breaks out, and we get this consolidation, this little handle here for the cup and handle, and then we get a very massive move to the upside. So buying the RSI breakout on a weekly time frame has been a good signal for gold. All right. Now, this is a sign of strength. This is a confirmation of momentum. Yes, we are a little overbought here. But as you can tell, we've been overbought many times in the past, and we have still gone higher in price. So it's not so much that it's a sell signal, maybe just rather a signal of, hey, look for the entries. Don't force your position if you're worried about, some short-term volatility. Look for the opportunities that you can find. Now, I think that gold is ready to go on a 75% run, GLD specifically from its $150 lows. Okay, the reason being is because the last lows that we put in over here, we went on a 75% rally. And if we were to do so, that aligns extremely well with our Fibonacci's. Okay, we love the Fibonacci's. And this is just an extra sign of confluence. Now, how long will it take to get here? Well, over here, it took about 3 years, 2 to 3 years. So I'm not saying that this is going to happen immediately, but if we look, this was basically the beginning of 2023. We're already about a year and a half through this, going from 150 to about 220, right? And so there's potentially another, 45 points to the upside here, roughly, that we're looking at on GLD within the next year and a half, if not sooner. Again, that's just a rough time frame, so it could be 1 or 2 years. All right, so that's where I think gold is heading at ultimately. I mean, these strong breakouts, they may be choppy, but I think eventually we are going to see, some higher moves up in gold over the coming years. Now, for trading opportunities short term, I'm looking at the daily time frame. And on the weekly, it's not as clear, right? It looks a little bit more messy when you look at the Fibonacci's on the weekly. But when you zoom into the daily, you can see the daily candlestick, this 221.79 Fibonacci level right here, respected super, super well. We opened there and we had a wick above, but you see we closed down below. And then we wicked up to that level a few times here, really unable to break it, just showing how present the sellers were at that 161.8% Fibonacci level here. Now we've broken out. The RSI has broken out. This is good. This looks like confirmation that we see momentum is also trying to break out here, and we see price action trying to break out here. Now we still need to clear 221.79, right? A rejection of 221.79 opens the potential for a double top, okay? But what do we have, right? Where is the trend? Well, we have highs, we have lows, we have higher highs, and we have higher lows, okay? So, if we were to reject and come back down, ultimately the weekly time frame would still be, lows, higher lows, but on a daily time frame, we would have a little bit more of a downtrend with the low and then a lower low being put in here. So it's not the end of the world if this turns into a double top, okay, and we reject up here, break through our neckline of roughly 211, right, and come back down for that double top to the 206 area, okay? That is still healthy on the larger time frames, but it's something you want to be aware of on the smaller time frames if you have a shorter time horizon. So you can try to jump the gun here, all right, and get in before the breakout and just be cautious around this 221.79. But once this daily time frame here starts closing above 221.79, I think you want to be a buyer, all right? And I think you want to put a stop just below, maybe around 220, right? And then you're risking about 1 or 2 points for, about an 8-point move to the upside. That's about a 4-to-1 risk to reward ratio. Above 229, going to be targeting 230, right? That is going to be our next Fibonacci extension here at the 261.8% Fibonacci. All right, that's what I'm looking at in GLD specifically. Now, when you look at this ratio chart of SPY divided by gold, remember, gold is the denominator here, okay? So if this chart is going up, it means that SPY is actually outperforming gold. And one of the buy signals we were looking for in gold was for this trend line here to break. So being that gold is the denominator here, if this starts going down, this means that gold is outperforming the S&P 500, outperforming the stock market benchmark that most people use. So this is a really good sign here. And if this can cross below the 61.8 Fibonacci and get back down below there, we're setting up for a very strong move in terms of relative performance in gold to the S&P 500. So, I'm looking to see, does this continue its downtrend here after breaking its uptrend? Or is this trying to put in a bottom? And could we start to see the stock market really continue to outperform gold as it has done here recently in the shorter time frames? Now, as I mentioned, a lot of people love the miners. I don't really like trading the miners too much, specifically GDX. I know a lot of people chase them for beta, okay? And beta is basically just outperformance of gold. But when you look, it's had a very negative beta, right? And GDX, meanwhile, gold is making all-time highs. GDX is very, very far away just from its 2011 highs, 2012 highs. We're very, very far away from there. Now, this could be a huge catch-up trade. And the coming year or two could be when we finally see the gold miners explode to the upside and have these crazy, massive, explosive moves that everyone's been waiting for. But right now, we're really just sandwiching, okay? We've got a nice triangle pattern here, and you just have to ask yourself the question, are we about to reject here, okay? Are we going to reject and head back down lower? Or is this going to be the time where GDX finally breaks out? If we break out, we're targeting 43 to 46 to the upside. Okay, now this is a weekly time frame. This is a weekly pattern, multi-year pattern. All right, this pattern has been happening for about 3-4 years. So it's not like we're going to head to 46 in 1 month or 2 months. Okay, you got to keep time frame and time horizon, into perspective. Now, this is a ratio chart of GDXJ divided by GDX. So this is the junior gold miners divided by GDX. So you can see this ratio chart here bottomed out in 2020, of course, with the pandemic. But what I'm really saying is we have a nice base here forming. And if this chart starts to break out past this base, what this means is that junior gold miners are going to be outperforming the gold miners. Okay. And so this is an area where I think potentially you can find some beta within potentially the GDX or potentially some of the junior gold miner individual names. Now, this is the actual GDX weekly time frame here itself. It's very similar to this ratio chart here. But what are we seeing, guys? We're seeing a big base. There's some big differences here, okay? This chart has not got above its anchored VWAP, okay? And this chart has not gotten above its 38.2% Fibonacci. The actual GDX chart has. If you anchor it to the highs over here that we had, the $66 highs, right? You can see that price actually opened and closed above this anchored VWAP here this week. This is very important. The anchored VWAP, not to get too complicated here, you use this basically, the simplest way to use this is to tell who's in control of the price action. Is it the buyers or is it the sellers? Is it bulls or bears? Below this anchored VWAP, this means that the average seller is in control, the average seller is in profit. And above this anchored VWAP, the average buyer is in profit. Okay, the average bull is in profit now. And that's exactly where we're at. We tested that level, right? We danced around it. We opened at it this last week and we had a strong close above it. This is a good sign for me. We're above that 38.2% Fibonacci. So I think above 41, you want to be long GDX, targeting the next Fibonacci up above, which is 50.61. So right around that $50 price area. Again, this is somewhere where you're risking about maybe 2.5 points to potentially make about 7 points. Okay, so that's roughly a 3-to-1 risk to reward ratio right there. So these are good risk reward setups here, where if you're correct on the play, you're going to make 2-3 times the amount that you are risking on these trade setups. Which is generally what you want to do, right? You don't really always want to be risking a 1-to-1 setup, right? Like let's say a stock's at 100, you don't want to be aiming for 105 and then losing or putting your stop loss at 95, because in those scenarios, if you're inconsistent, right? Meaning that if you lose 50% or more of your trades, you're not profitable, okay? But with a 2-to-1 or a 3-to-1 risk reward ratio, you can afford to be a little bit more incorrect or a little bit less accurate. You don't necessarily always have to have above a 50% win rate to be profitable, because your losers are smaller than your winners, right? So if you have a 3-to-1 risk to reward and you lose 2 trades, so let's say you lose 2 points, but on your third trade you win and you win 3 points, well, now you've lost 2 but made 3, so you're up 1 point. Okay, just general trading perspective and things to keep about. Now this is the daily time frame. The daily time frame here is setting up. So not only did the weekly offer us an opportunity with the retest of that anchored VWAP, which is right above the 38.2% Fibonacci, but the daily now looks very clean, right? We had clear resistance. We had a clear double top. Okay, we talked about the potential double top in GLD. This is what a double top looks, guys. This is very, very textbook, right? You have resistance, and then you actually break through the neckline. Okay, a double top is just not 2 forms of resistance, right? Hitting resistance in the same area. That's just an example of overhead supply. It becomes a double top when you break that neckline and you flush down to where the pattern began. And that's exactly what we saw here. Okay, now what did we get? Well, we have old resistance, old supply. Now becomes new support and new demand. Okay, you see we come up, test it here for a third time, right? And break through, retest it. And now we're approaching up here again. So once again, we have a possibility here for a double top to form around 44.70. Okay, but it's not confirmed. It's not a confirmed double top until we flush through support, which is going to be right around the 39 area, 39.88, 39.50 area is going to be your neckline for this double top. Okay, so I think being the risk factor of a potential double top here, you want to buy the breakout. Okay, so above 44.70, you want to be targeting longs. Okay, now there is a Fibonacci level right above at 45.34. So you just want to consider this a potential overhead supply area. Okay, if we were to just kind of draw this in, something like this, this is potential overhead supply area where bulls might be taking profit based off of Fibonacci, not based off of old sellers that are holding the bag from over here. Like over here, there were old sellers. The buyers from here were looking to escape once they, got back to break even. This is going to be an area where Fibonacci traders and some traders may potentially look to take profit. But on a breakout of this area, your first target is going to be 47.68, then 52.50, and 54.28. So again, depending on your time horizon, right? If you're buying the breakout on 44.70, and let's say you're putting a stop loss below 42, right? That's roughly 3 points. And then you're targeting, about 3 point or you're targeting almost 10 points to the upside, about 9 points. That is a 3-to-1 risk to reward ratio there, right? And it just depends on your time horizon. Remember, these are daily time frames, weekly time frames. So these patterns, they're not small 1 hour or 15-minute chart time frames. They're not going to just happen within a day or within a week. These will need a little bit of time to develop. And so that's why we have shorter term and we have longer term price targets on these charts. Okay, so GDXJ specifically, the junior gold miners, they look a little more promising to me than the regular gold miners. And Harmony, HMY, has been one of the strongest, right? If you look at this weekly time frame, I posted this chart in the Discord a while ago. And what do you see? Inverse head and shoulders, right? Left shoulder, head, right shoulder. Look at how clean the Fibonacci aligns here, also with the chart pattern being the neckline. So the 61.8% Fibonacci here was also your neckline of this inverse head and shoulders. And what do we get? I mean, you really can't ask for any more textbook technical analysis here, right? You have the chart pattern. Okay, boom, here's your chart pattern. You get the breakout, you get the retest of the neckline, and then you get the explosive move to the upside. We've already hit the inverse head and shoulders target here of 764. And now the next Fibonacci extension is going to take us up to 1116, right? So if you're a longer term trader on the breakout above 764, you could put a stop loss here, maybe around 7. So, risking 0.64 points to potentially make 3.5 points. So that's a really good risk to reward ratio there as well. But is this the best place to chase into a trade and to enter into a trade? No, maybe not, right? Maybe not on this weekly time frame. But when we actually zoom into the daily, there is an opportunity setting up here. Okay, so here's that 764 Fibonacci. All right, and what we've got now is we're looking to see, can we break out above the previous cycle highs of 980? Okay, so remember, all of these charts have the potential to set up a double top, right? So this is why risk management is so important, right? If we were to rally up towards that 980 area, reject it, and then break through our neckline here of 831, well, then we'd be looking at a move back down to 764, potentially even lower. So what do I like about it right now? Why is it on my radar? Well, the RSI is broken out here. Okay, remember we talked about these RSI breakouts sometimes can be leading indicators, right? So maybe this is an indicator that Harmony is actually about to break out on the daily time frame here above that 980 level, right? We see the MACD is curling here. The MACD is more of a lagging indicator, right? So you have your leading indicator breaking out. You have your lagging indicator curling. A buy signal is whenever this white line crosses above the red line. Here was our last buy signal that we had on the daily time frame for the MACD. And you see it was bouncing on support, and then we finally got that MACD crossover and we saw an explosive move from 547 all the way up to 764. So could we potentially be setting up for another explosive move? I think so, because of the things that I'm looking at. And if we get this MACD crossover and if this RSI breakout is going to be a leading indicator. Another thing, right? So a third thing that I like here is if you anchored VWAP to this $9.80 highs, look at what's happened. We broke out past that level, we retested it, and now we're pushing up higher. We're also closing right here about at the 61.8% Fibonacci. So I think the way that you can play this is above 923. You're looking to first target 980, then 1072, 1116, and 1221, depending on your time horizon. And then also depending on your time horizon, you can adjust your stop loss, right? So if you want to be aggressive and enter in now and then have a tight stop loss, I think that either using 923 or 888 or using this anchored VWAP as a trailing stop loss, right? Because if price continues to move higher, right, and let's say candlesticks continue to move higher, this anchored VWAP is going to slowly start to curl up, right? You see it was going down originally as price was in a downtrend here, right? And to me, this looks like very controlled and systematic algorithmic selling, okay? Controlled selling is bullish. Capitulation is not necessarily bullish. There is a difference, okay? This is controlled selling here. We see controlled selling, systematic, Price moves up here, we have controlled selling, then we get a breakout, right? And then we get controlled selling, and then now is this potentially the breakout? So I'm watching these gold stocks, and specifically some of these junior gold miners, really closely here. To me, GLD and HMY offer some of the best short-term opportunities for setups and clarity, just to where you can clearly define your risk to reward ratio based on your own personal risk profile. Now, that's going to wrap up today's video. Don't forget to sign up for that newsletter. If you enjoy these charts and analysis, you're going to enjoy the newsletter, okay? Because I try to include some stuff that maybe is not always on the YouTube channel, right? And it's a really great way to have that stuff directly to your inbox in case you're not watching every single video that I'm dropping, because I'm dropping multiple videos a week. And I know there's tons of content out there to consume. You can keep up with the website or sign up and have those sent directly to your inbox. And you can join the Discord, guys, for just $1. So for your first month will only be $1. After that, it will go up to regular price once we're back into June. But as I mentioned, we're trying to revamp and slowly upgrade the Discord over the coming weeks. And there's going to be some really great features and, resources, many good things. Okay, so all the charts that I post in my videos are in the Discord, as well as many more, such as the data tab, where I put tons of the data that I consume. All of the data that I consume I now share with you guys through the Discord. Many other things inside of there. It's a really great feature, and I'd love to see you guys in there. Thanks again for watching. Smash that like button, subscribe to the channel for more. And if you want to ever book me for a one-on-one session, you can do that directly through my Ko-Fi page using the link in the description. You click on the commissions tab, and in there you can book a 30-minute or a 1-hour session. You can also request a video for the YouTube channel on a specific topic of your choice. Leave me a detailed request saying what it is that you want, what questions you have, etc. They also have this buy a coffee button. That's just a really cool feature to basically leave a tip or donation for all the free valuable content I do put out there, such as these YouTube videos and the newsletters. Thanks again one last time, and I'll see you in the next one.